Stocks trade firm, but advances don't top declines by a big number. Auto and consumer durables are the prominent gainers, while capital goods and oil and gas drag.
Godrej Consumer slips after a strong run-up following its update of double-digit EBITDA growth in the first quarter. Concor too skids on volumes in the first quarter, growing far slower than its full-year guidance.
Jupiter Wagons is in focus with a plan to raise near 500 crores, and Pitti Engineering with an expected 360 crores raise are the latest to join the QIP rush. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it's turning out to be a session where we're just about consolidating with a positive bias. We had the US markets, which were at record highs as well. We have Brent, which is softened overnight. So all of that helping in terms of cues. But not to mention that we have a lot of cues lined up. Yes, earnings is one of them. But on the global front, we have the Fed chair's testimony to Congress, which is going to take place tomorrow, and then follow it up with the CPI data from the US, and then CPI data on the 12th of June from back home as well. So a lot of data points to watch out for, and obviously we do have earnings to reckon with.
A lot of them, and as understandable, you know, the India VIX is higher ahead of all those big events that Ekta just spoke about, along with earnings and then the big budget that comes by on July 23rd. But the Nifty has hit a record high, and that's the big headline for the moment. The earlier record high was 24,401. Today's high was a little over that itself. And now the Nifty's understandably retreated from those levels as well. The street is hoping for a bit of a range. So the high today on the Nifty is 24,401.2. So it's by 0.2 points that the Nifty has actually gone ahead and hit a record high nonetheless. The bank Nifty is doing well, up around 1/3%, but it's no one particular sector which is taking the index higher today. There is contribution from every sector, and most notably from the auto space as well, led by Maruti, which is up 6%. So we'll discuss more on what triggers there are for Maruti and the entire auto space. But for now, it's a lot of updates that have come in. Godrej Consumer Products, which saw a bit of a dip in today's trading session post their quarterly update. Container Corp too, but both for divergent reasons. So let's talk about Godrej Consumer Products first. Remember, yesterday with Dabur and Marico's update, the entire FMCG pack was doing extremely well. So there were expectations of a good update coming in from Godrej Consumer as well. So as a result of which, there was some bit of sell-on news taking place. What is the news? It's a mixed quarter. Flat sales reported on a reported basis. Double-digit EBITDA growth is what the company has been looking at in the first quarter. India growth, that will be in high single digit in value when it comes to the organic part of it. And if you include Raymond's consumer business as well, there would be double-digit volume growth as well. Depreciating Indonesian currency may lower reported growth. So there is double-digit growth in Indonesia as well. But because of the currency effect, the overall impact would be flattish or negative from Indonesia and flattish on an overall basis. And Africa too, the organic business is expected to see a double-digit volume decline. Again, that is by design, because Godrej is focusing on highly profitable businesses. So out there, the EBITDA actually will grow in double digits as well. So sell-on news taking place on Godrej Consumer. But for Container Corp, the first quarter volumes, the overall volumes grew 6%. Exim, which is the larger part of their business, showed a volume growth of just 3.3%. And domestic business showed a volume growth of 15%. Remember, the company spoke to us post their fourth quarter earnings and said that their target for this year is 15% volume growth on the Exim front and 18 to 20% on an overall basis. Still early days in this year. Still, the first quarter had a lot of one-offs that needed to be, corrected. But 6% volume growth as against a guidance of 18 to 20% for the full year only adds pressure for the remaining 3 quarters to go ahead and meet those margins, as a result of which we are seeing some softness in Container Corp.
Okay, all right. So that's Godrej and a couple of these updates which have come through. But the other stock which is in focus is Dr. Lal's PathLabs, which is surging in trade. This is after positive commentary from UBS. Nimish is tracking this story. He's here with the details on what UBS likes about Dr. Lal's and the target price there as well.
Well, just ahead of the earnings, UBS has gone ahead and raised the target price on Dr. Lal PathLabs to 3,500 versus 2,900 earlier. They have a buy rating on the stock, but they believe that the market concerns about low patients volume growth, which was just minus 1.5% in FY23 and just 2.6% in FY24, those are likely to fade as the company is likely to post or deliver 6 to 7% patient growth going forward. In fact, the faster growth in tier 3 cities indicates that the company is gaining market share, and they can go deeper into that. Further, all the improvement in terms of profitability is helping the company to plow back that money for growth. So on back of this, they've raised the earnings estimate for FY26 and FY27 by 7 to 8%, and hence they've raised the target price as well, now to 3,500 versus 2,900 earlier.
Right. The other one is Gail. Motilal Oswal has issued a bullish note. Sonal joins in to tell us more about what the note says. Sonal.
Thank you so much for that. Well, Motilal Oswal talks about Gail being the top pick in the oil and gas space. The stock already has returned 27% in terms of returns to the investors this year itself. Gail remains a structural upturn marked by a couple of reasons. The first one being its improving volume growth outlook, which they expect for the next 2 years to grow at 7% CAGR. The second is the potential of 10 to 12% hikes going forward. Now remember, that is something which was expected for major pipelines for Gail, and that could be the next trigger for the stock as well. The completion of the transmission and petrochemical projects worth 29,400 crore rupees, which could improve its return on equity and return on capital employed as well. With the impending end of the investment cycle, they expect free cash flow generation of close to 4,040 crore for the company going forward. Considering the company has been talking about a lot of capex plans as well, so improving balance sheet is something which would be positive for the stock. They have a buy rating with a target price of 260 rupees a share, and they remain bullish on the space.
Okay, all right, Sonal, thanks very much for that. Well, a lot of stocks in focus. We need to take a short break, but up next we will be talking to FADA as the UP government has waived registration fees on hybrid vehicles. Stay tuned for that. Maruti, remember, is the top gain on the Nifty. We'll be discussing that.
Extremely well. It's up around 1.5%. On the other side, we have the PSU Bank Index as well, which is among the top indices, which is gaining today, and that's led by SBI. So the intraday chart of SBI comes up for you on the screen. But we have a note coming in from UBS on chemicals stocks as well. They've initiated coverage on a couple of these names, and as a result of which all of them are buzzing around in today's trading session. What is their rationale? Sonal joins in to tell us more.
Thank you for that. Well, UBS has not initiated coverage, but they are talking about their view on a couple of these names. For instance, they like PI Industries and Navin Fluorine from some of the chemical names. They have a buy rating on these two stocks, but they have a sell on Aarti Industries and Gujarat Fluorochemicals. Now, the big talking point has been how China has been adding capacities, how it has been exporting goods at lower prices. But now they say that the worst looks like it's over. Pressure from China capacity additions may have peaked, and recovery is likely to be drawn out. Couple of reasons why they think so. First, stimulus policies in China is aiding margin expansion. It also means more consumption in their own country itself. Producers are reducing utilization to improve the supply-demand gap, which has been really huge so far in last 4 quarters. Capacity addition are seeing delays. That means there will be enough demand for the supply. Somewhat lower inventory over time, which would provide support. However, trade war escalation, that continues to be the big risk, where China has always seemed to benefit from that. But near-term demand remains weak. Cyclical upturn is seen from the end of 2024, something that most of the chemical companies have been talking about, that they see recovery only in the second half of FY25. But these chemical names have already started pricing that in, and we are seeing up move on a couple of these names.
Okay, all right, Sonal. Thanks very much for getting us that update on chemicals. That's GM Breweries, the numbers flashing on your screen. There's a profit growth which is taking place of around 25%, so 25 crores versus 20 crores on a year-on-year basis. That stock at around 894 odd rupees. Revenue a little subdued, under 5% in terms of growth for the top line. But the big story that we're tracking today is that the Uttar Pradesh government has waived registration fees for strong hybrid vehicles. The move raises hopes of other states following suit, in a positive for Maruti, Toyota and Honda. Parikshit is here with the details and to break down the news for us. Parikshit.
Well, the UP government had brought out an electric vehicle manufacturing and hybrid policy in the year 2022. Now, this brought about a complete exemption of road tax and registration on electric and strong hybrid vehicles. The hybrid cars were also included in this policy. Now, while the exemption on electric vehicles as part of the policy was implemented from the year 22-23 onwards, the clause on exemption for strong hybrid cars was not for some reason. Recently, we believe, according to the Federation of Automobile Dealers, a customer went to court and got relief, and the court ordered the UP government to start giving exemption on strong hybrid cars under the policy as well. So from the first week of July, buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption, which means a complete exemption from road tax and registration charges on a strong hybrid car. So this literally brings down the cost of your hybrid car by about 2 lakhs. So if you were buying a Toyota Innova Hi-Cross for that matter, the cost could come down anywhere in the range of 2.5 to 2.6 lakhs. If you're buying a Grand Vitara hybrid, which costs around 19 to 20 lakhs, your cost could come down by about 2 lakhs or so. So this is a big benefit, so to say, but this has happened on the orders of the High Court. Toyota and Maruti are the companies which are selling hybrid cars in India, so this is a big boost for them. Nationwide, companies have been asking for tax relief on hybrid cars. That has not come through the GST Council. It's not been taken up either by the GST Council either. But for the moment, this is only applicable in UP, a 10% tax reduction and complete waiver on road tax and registration charges on hybrid vehicles in Uttar Pradesh.
All right, Parikshit, thanks a lot for putting that into perspective. So to discuss this and more, the impact of this on the entire industry, we do have with us Vinkesh Gulati, who's the former chairman, Research and Academy, FADA. Thanks a lot, Mr. Gulati, for joining in. Just off the cuff, if I wanted to know how big is the UP market as a proportion of the entire auto market, and we understand that hybrids form 2% of the total PV market. With this waiver, how much can it actually grow to, and how big an impact is this, or how big an announcement is this?
So practically, if I talk of Uttar Pradesh, this is one of the top 3 passenger vehicle market in India. And no doubt hybrids, or I can say the more vehicle, if I see the ratio, the entry-level vehicles are sold more in UP, being a hinterland, as such, and the rural market is big there. So but on the other hand, this is a big boost towards hybrid vehicles. And this will surely benefit the 3 OEMs which you have said, Maruti, Honda and Toyota. And it's around a 2.5 to 3 lakh benefit, which is being given. I am confident that the 2% hybrid ratio, what we have seen as of now, will surely increase by 1% or 2 going further, because slowly and steadily what we are seeing that 20 lakh plus cars are getting the bigger tandem. These SUVs are seeing a major growth as compared to entry level. And the benefit what high riders or Vitara will get will obviously eat into the market of other SUV players which don't have a hybrid in UP. Additionally, I'll tell you one more thing. There is a 50% rebate in Chandigarh also, which has been going on for long. But 100% I feel UP is the first state to do that.
Okay. Do you think that other states are probably going to follow through?
That's a very good point here, because we'll now slowly see how the market is reacting, which is obviously positive that we expect. And it gives a very strong message that the government is, one, supporting electric vehicle, which most of the governments are. But UP government has come up to support the strong hybrid also, which is obviously not as good as EVs, but it is better than the other ICE vehicles what we sell. So overall, I am looking forward to a lot of governments working on it. Maybe a lot of customers will push this to government or the economists which are working for social and environment to push other governments to come up with similar type of schemes and benefits.
So just wanted your thoughts on 2 things then. One, what could be the foregone revenue on account of this to the states? And secondly, now that the states have taken this action, at least one large state has taken this action, do you think the larger demand of lower GST would also be considered or could also be considered?
GST is a point which is a central point, doesn't depend on the state. and it has a long history of discussion going on. For first, FADA was behind government to reduce GST on two-wheelers, and now for the past 6 months we are seeing a pressure from OEMs, the specific OEMs, to reduce GST on hybrid. I have my doubts that there'll be anything which will come on the GST, but the registration tax, the road tax which UP has done, will obviously trickle down to, I feel, some of these states which are more forward-looking. And coming to the what you said about the loss of revenue, obviously it's a big loss, but the kind of message the UP government is giving to the world and the country and to their own people living there, that they are positive towards saving environment, supporting the Aam Aadmi to buy products which can help improve the environment and reduce pollution.
Okay. Do you think that there'll be any impact on the EV or the pure EV market?
Not pure EV market, because those are actually, the price segment is different, because hybrid vehicles are normally costlier. EV we can get from, like, Tata is around 10 to 15 or Mahindra is around 16. So we have a range of 10 to 20 of the electric vehicles which are mostly sold in UP market. So there are very, very less vehicles sold which are more than 20 lakhs of electric vehicle in India. And normally what I am aware of is hybrids are around 20 or 20 plus. So I don't think so it will affect electric vehicle, but I'm sure that it will motivate more customers to at least consider hybrid going further in the time.
Okay. Just had a quick question about Maruti itself, because UP is a strong market for Maruti, around 12% of their domestic volumes in FY24. How much incremental rise do you probably see because of this move simply for Maruti? I know you know that's a difficult assessment to make, but just based on what you've seen from the industry.
See, overall, UP is a market where the average ticket size is not as high as metros or the bigger states in the world. So if we say that all India is around 12 to 15 lakhs, UP normally hovers around 10 to 12 lakhs or 13 lakhs. And hybrids are all costlier than that. Even then, we'll see a better share going towards hybrid. It is around 2% today. I'm sure going further, it will be 3 in coming 2-3 months and go up to 4. And obviously, the biggest benefiter would be Maruti or Toyota, or a bit to Honda also. Now, this will, and another point, catalyst to see how the other brands come up with their strategy against these hybrids, or do they come for more hybrid products in India or not, or how will they handle this special benefit what hybrids are getting in UP, and I feel slowly all over India also.
Exactly, actually, with this regulatory favor coming in from one state, we still don't have certainty on whether other states will follow this suit or not, or whether this will move the needle too much. Would it make sense for companies to actually put their R&D behind, hybrid, because of this little incentive that has come by? I just wanted to understand that, because it would make more sense for the companies to, pay attention to things which are selling a lot more, like SUVs, etc.
Yes, but if you see for the past 2-3 years, the transfer from ICE to EV hybrid was always thought as a stopgap arrangement. There were some OEMs who had been forthcoming and they had gone through that way. There are some MNCs which have hybrid product which are being sold around the world, but they have still not got in India. So I feel there had been a lot of confusions of getting hybrid in India or not. There are some Indian companies which are not working on hybrid as of all. They're only doing research but not planning to launch. They are directly plunging into the electric vehicle bandwagon. Hybrid surely is being seen as a stopgap arrangement. This will force other OEMs to come in to plan something. Maybe they have to start electrification earlier, or launch some hybrid products in that. As of now, I feel even Chhattisgarh has some schemes of rebate on hybrid on the road tax. So there are 2-3 stray cases which are going in these states, and I feel with UP now becoming the biggest and a full 100% rebate what UP is giving will obviously motivate the OEMs to come into hybrid and other states to also follow suit.
Okay, all right. We're going to let you go on that note. Always an interesting conversation. Thanks very much for joining in and speaking to us about what has been a big development. As you can see, Maruti continues to be the top gainer on the Nifty, up around 6% It'll be interesting to see how much they do benefit from this incentive about strong hybrid vehicles in the state of UP and how much their incremental market share could increase to. We need to take a short break with the news that the Nifty is at a record high, so no problems there. In fact, we'll get talking about the technicals of the market. Sachitana Notekar of Trade Bulls will join in with some trading strategies in what to do in such a strong market. Stay tuned. Welcome back. Well, Sachitana Notekar of Trade Bulls joins in now to discuss the technicals of the market. Sachitana, hi, welcome to the show. Well, extremely good, market on our hands. We're sitting at record highs. We have a lot of top gainers on the Nifty. Maruti, let's start with that one. That stock is up around 6% followed by ITC, which is up around 2%. What would your approach be towards a couple of these counters?
Good afternoon, Ekta. Clearly, I think the market is in a very strong grip. It has been trending above its 5-day exponential moving average for almost 26 consecutive sessions. This particular average is placed somewhere close to around 24,300. So unless we don't see a closing below the same, we expect that this particular gradual up move may take it forward towards 24,560 zone. Clearly, I think if you look at ITC, there is still a lot of headroom which is available. In fact, it has managed to display a breakout from its 4 months of consolidation, and the entire pattern structure is still indicating an up move towards 470. So definitely, long positions should be retained here. Probably fresh long positions can also be added with a trailing stop loss somewhere close to around 448 on a closing basis. So we are anticipating that this particular up move will continue in the markets going forward. And even if you look at Nifty Bank, the base at around 52,250 looks very stable. It is still oscillating within its previous day's trading session. So I think the moment Nifty Bank starts trending above 52,700, we may see a good short covering move even unfolding in Nifty Bank as well.
All right, and individual stocks, what would you recommend?
Good afternoon, Mangalam. Clearly, the strength is within the FMCG pack, and here HUL has displayed a good breakout from a rounding formation. If you look at the OI stats, even 2,700 call writers have been pushed, 2,600 call writers have been pushed behind, and we are anticipating that this long built-up cycle may continue going forward. So we are expecting that the momentum may continue towards 2660 on HUL's futures, and that's why we are recommending building long positions here, keeping a stop loss at 2580. The positional target of the pattern is placed somewhere close to around 2730, so the reward to risk is still very good. So we are recommending building fresh long positions here. And the other stock which has hit my radar is India Mart. Now, if you look at the last few trading sessions, the stock was consolidating. There are good signs of short covering move unfolding here. The moment it starts trending about 2700, we may see a good spike in momentum, which may propel the stock towards 2840. And that's why we are recommending building long positions here, keeping a stop loss at 2660.
Right, Sachi, thank you so much for joining in, giving us calls. India Mart as well as HUL, both of these stocks are on his buy list, both of them doing well at the high point of trade, in fact. So let's continue that theme forward itself and speak about the way the markets are poised right now. The Nifty has hit a record high today by just 0.2 points over the previous record high, but it's a record high for the books nevertheless. And like we were pointing out, it is been a broad-based up move that we're seeing. All the sectoral indices come up for you, and that will tell you that it's a rally which is led by not only the auto space, but the Nifty bank, which is up around 0.25%, the FMCG pack, which is doing extremely well as well. So Maruti and ITC are the top contributors. The Nifty bank not falling too much, and SBI doing well has contributed to that up move as well. And even as the market's moving higher, remember this time around we're mindful of the gains that we're putting on, because the India VIX is rising as well. There was a 7% up move yesterday, and that's followed up with a 3% up move because of the big events that are lined up both globally and locally. So we have the results starting this, the big results starting this, end of this week, and we have the budget as well towards the end of this month. And in line with that, the two heavyweights that we need to track are both Reliance and HDFC Bank. For the last couple of trading sessions, HDFC Bank had taken a bit of a back seat, whereas Reliance had moved about 9% higher to a record high. Today, Reliance is taking a bit of a back seat, and HDFC Bank is trying to inch higher. So 1657 is a mark that we'll be watching out for HDFC Bank, which is the 20-day moving average. And that will be all the more important in the second half, because we do have the Nifty Financial Services expiry that plays out in the second half today. Where is the Nifty Financial Services expiry likely to be? There is the highest amount of premium at the 23,650 straddle. A straddle is a call and a put together. So those who are writing those straddle are hoping for the Nifty Fin Services to expire in a range, and the range that they're playing for is closer to 23,600 to 23,700 itself. It's 100-point. A breakout above that range could lead to further short covering, and that's something that would be dependent on the way HDFC Bank moves. For the Nifty itself, 24,400 call extremely active, and the 24,400 put equally active as well, telling you levels upwards of 24,450 could face some sort of resistance, whereas levels of around 24,250 to 24,300 would see strong support as well. Two stocks I'm watching out for in particular: IEX may enter F&O ban, so that's something we'll watch out for. And Hindustan Copper, it was among the earlier entrants in the F&O ban in the series, and may exit F&O ban, so that's another stock which would be on our radar.
Okay, all right, Banglam, thanks very much for that. That's on the F&O space, but continuity of policy and governance could be the theme again, says Anand Shah of ICICI Pru AMC. He also adds that there could be some relief for the middle class when it comes to the budget, the simplification of taxes at the bottom. Let's listen in to what he had to say.
The budgets over time have been more consistent, and to that extent, the incremental surprises that come out of budgets have only decreased. And we believe there is more continuity of policies, more continuity of governance, or the direction of the economy would not change or alter significantly. Particularly for middle class, we can have some bit of simplification of the tax. Definitely, that's one of that, and that also means that you might see a lower tax rate to support the weakness that we have been seeing in the consumption at the bottom of the pyramid. So I think there will be some bit, but on a broader level, I don't see the investments on infrastructure, the investments or the PLI benefits coming into further induce manufacturing, support the housing. I think this would be the pillars. Urban infrastructure, supporting housing, and supporting manufacturing, because all these three has a lot of potential to create jobs at the bottom of the pyramid. We want to stay and give a lot of time to this sector and these companies because we're seeing something externally changing. As China becomes more prosperous, so China is the largest consumer of metals as well as the largest producer and the largest exporter of metal in general, particularly steel. And as it becomes more prosperous, it will have to decarbonize its steel making. That's happening as we speak in Europe, Japan, Korea. It would happen in China also, slowly but steadily it will happen, which means the cost of producing steel in China should structurally go up over the next 3 to 4 years. And China being the largest net exporter of steel in the world, that means that globally the steel prices should be.
Welcome back. Well, for the market, stable, so no real movement which is coming in. So the Nifty is currently at around 24,396 odd. It's at a record high in today's trade. Just want to point out that from the broader markets, we have a couple of stocks which are buzzing around. So we have IOB from the PSU banking space, which is up around 4.6%. Vijaya Diagnostic, which is up around 3.7%. And actually, a couple of the PSU banks are doing well. Central Bank of India, Bank of Maharashtra. A couple of these banks are showing some amount of upside in today's trade. And on the other end, we have stocks such as Mankind, Gland Pharma, which are up anywhere between 2 to 3 odd percent. Phoenix Mills is up around 3 odd percent. Remember, they came out with their update yesterday. So it seems to be quite a colorful market for, different types of sectors seeing gains. MRPL is up around 8.5 odd percent. But brokerage house Bernstein has expanded its coverage for the IT sector, adding a number of engineering services companies. Reema is here to tell us more about it.
Well, let me start with KPIT Tech because that's a stock reacting positively. And this is a stock which is up nearly 600% in the last 3 years. And it's vastly outperformed its closest peer, Tata Elxsi, which is up 63% in that same period of 3 years. Now, Bernstein has initiated coverage on KPIT Tech. They've got an outperform rating target price of 2,120, so much higher than the lifetime high of KPIT, which is 1,774. The key reason is the company is a dominant player in the auto space, in auto engineering, in areas like electrification, ADAS, body electronics, and they're servicing large OEMs like BMW, General Motors, Cummins. But on the flip side, Tata Elxsi, they have a negative call, an underperform rating with a target price of 6,030. They say Tata Elxsi has delivered the slowest growth amongst peers over the last 5 years at 17%. High revenue contribution is a risk. And third, valuation at 50 times forward multiple is expensive. Back to you.
All right, Reema, thanks a lot for that. But we have, Affle, which is also in focus, buzzing around in today's trading session. There's an initiating note coming in from Citi, 1,600 rupees target price. What's the rationale here?
Thanks so much for that. So first, just a quick word on Affle India. Now, Affle India is an ad tech platform which helps with your mobile and digital marketing. So basically, if you are an advertiser and you want to sell your product, you will contact Affle and give them a share of your marketing budget, and they will help you gain customers or users. So now Affle India focuses on 4 key segments: E, F, G, H. E stands for e-commerce, edtech, entertainment. F stands for fintech, FMCG, food tech. G stands for gaming, groceries, government. H stands for healthcare, hospitality, travel. Now, the company did go through a bit of a slow patch because of the funding winter for many of the startups, and therefore they had gone slow on user acquisition or customer acquisition. Then even the GST on gaming had hit them because they do cater to gaming also. But now Citi has come out with a note, and they're saying that the company is a beneficiary of increasing digital and mobile ad spends. Some of the strengths of Affle, and these are noteworthy considering that they are competing with the likes of Google, Meta, Amazon, and Apple in this particular space. They're saying that Affle India has a connection with over 3 billion connected devices. They have partnerships with mobile OEMs like Samsung, Xiaomi, and other mobile operators, which allows the company to directly communicate with the device. They're also allowing enterprises, that's your advertisers, to directly help in advertising in regional languages in India or come up with personalized ads, largely more in tier 2, tier 3 cities. And their M&A track record has also been fairly decent, and that's helped them gain inroads in the developed markets only. So they have diversified away from India a bit. So Citi has initiated coverage. It's a target price of 1,600. They expect the top line to grow ahead of the industry growth rate. They also expect margins to expand by 300 basis points from 16% to 19%. And they go on to say the valuations at 47 times is below their long-term average of 56 times. But remember, just as a noteworthy risk, they are competing in a crowded space where the likes of Google, Meta, Apple, Amazon control 70% of the digital marketing spend. Back to you.
Okay, all right, Reema, thanks very much for that. We need to take a short break, but a lot more on the market. Stay tuned. Welcome back. Well, let's talk about a couple of other companies. Indian Hotels is in focus. We spoke to Puneet Chatwal, who's the MD and CEO of Indian Hotels, and they said that they're targeting 10% revenue growth over FY24, and they will add 10 to 12 Ginger hotels every month. Listen in.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year with or without G20. We think we are on track. For the year, we did 33% almost. So I think anything north of 30 for the full year is a very good industry-leading margin on a global front. We should not forget we have also hotels in US and London and Cape Town, and it's not just a domestic. On the domestic front, on standalone, we are north of 40. And I think that's a very respectable and a very high margin for the kind of business that we are in. And we have been very confident in giving this guidance, and we stand by that. And if the growth of Ginger starts in the way we have been thinking it should, like adding at least 10 to 12 a hotel a month just with the Ginger brand, then it starts diluting the overall average achieved rate, because a Ginger brand would do like 4,000 or 5,000 rupees as an average rate, whereas Taj would do north of 15,000.
Okay, well, that is Indian Hotels. But the other space which has really been buzzing around is the entire jewelry space. Manglam, you've done a lot of work. There's Titan, there's Senco, which is in focus. Give us a sense in terms of what you've picked up in terms of the key trends when it comes to the jewelry sector. This is our Value Plus segment on Halftime Report. Give us a sense.
It's very important, to look at the jewelry companies right now, especially after the first quarter update that has come by, largely because the numbers are quite different and divergent. We have the smaller players. Someone like Kalyan Jewellers has shown a growth of 29% in the first quarter. Senco, the retail sales grew by about 11%. If you add the wholesale, B2B and all of that, the overall sales is close to around 9%. And Titan's own jewelry business is grown at around 8%. So one would say, why is it that Titan is growing so much slower than everyone else? The one big point is because Titan's base is much bigger. So if you just take a look at the FY24 revenue, Titan's jewelry business is 42,000 crore rupees with a margin of 12%, whereas Kalyan is 18,500 with a margin of 7%, and it's grown much faster. Senco as well is about 5,000. So Senco is nearly 1/8 of what Titan is. Kalyan is less than half of what Titan is as well. But what's taking place is that they're also increasing stores at a much faster clip on the smaller base that they have. Tanishq currently has almost 500 stores. They've added 11 stores. Kalyan has added 13 stores via the franchise route, and they have 217 stores. So on a percentage basis, the store addition for Kalyan is a lot higher. And even for Senco, which has around 165 stores, they've added about 6 stores in the first quarter itself. For the industry, there were a couple of headwinds in the first quarter. 20% increase in gold prices over the last 1 year. Fewer wedding dates. There was the heat wave. There are elections. So all of that impacted sales for the companies on the whole. Whereas the tailwinds were, in case of Kalyan, for instance, store expansion. All the companies saw double-digit Akshaya Tritiya sales. There were high growth in modern formats. Titan, Carrot Lane grew 2x the pace of the overall industry, as in terms of what Titan did, and we had Candere do a lot better for Kalyan Jewellers as well. And there were lower diamond product sales, so that was a bit of a headwind as well. Let's see where that goes going forward. Key to track for Titan going forward is additional penetration of store footprint, because everyone else is at just around 165 to 200 stores. Can Titan go ahead and penetrate otherwise, unpenetrated markets? Secondly, faster pace of growth by newer players on a low base would be, something that would make Titan look a little slower. And can margin guidance of about 11 to 12% be maintained as well? Because most on the street are factoring in lower than that margins as well. Increased competitive intensity may impact the making charges for jewelry companies, and growth in optionality businesses. What are these optionality businesses for Titan? We have the eye care business, we have the watches business, we have the ethnic wear business, and all these others. Can they grow extremely fast as well? Key to track for Kalyan and Senco would be the pace of store addition and same store sales growth, impact on margins due to increased franchise stores as well. The jewelry industry right now is close to 36 to 38% organized, as against 22% what it was in FY19. So organized players are growing 2 to 2.5 times industry average, whether that continues or not. For all of this, what are the valuations that you're paying? Titan earlier would trade upwards of 16. Now with a 20% cut from its highs, is now coming at around 53 times 2-year forward earnings. Kalyan has increased drastically, so at 41 times it is just at a 20% discount to Titan, and Senco is at 28 times. So they are trading at valuations which are similar to the kind of market share that they have right now. But for Titan and Kalyan, that is one valuation check that one will keep an eye out on, as it has narrowed the gap between both Kalyan as well as Titan.
Okay, all right. So there's a complete analysis there on our value add segment in the jewelry space. Thanks, Manglam, for that. We'll take a short break, but on the other side, Manisha Gupta will be joining in on our commodity segment with Rajiv Budhiraja, Director General, Automotive Tyre Manufacturers Association. Stay tuned.
Welcome back, and joining us on the show now is Rajiv Budhiraja. He's Director General at Automotive Tyre Manufacturers Association. Rajiv, hi, thank you so much for joining us. First of all, on the rubber prices itself, because we've seen stronger gains in last few weeks and months, holding around that 200 rupees per kg mark. How has that impacted the industry?
Well, first of all, I think rubber prices today are at a 13-year record high, having crossed 200 and now, hovering around 205 and 6 mark. That by itself is, from the consumer perspective, a point of concern. But I think more than that, it's availability, that is become a major concern for the tire companies. Even at these prices, domestic rubber is not available. And there is hardly any visibility seen, going forward also for multiple reasons. So at this point of time, both price and its domestic availability are the two major concerns for the tire industry.
Rajiv, tire industry demand itself, what is the number that we are working with in sense of an year-on-year demand growth?
Last year, our consumption was almost 14.25 lakh tons. This year, I think we are anticipating an increase of anywhere between 5% to 8%, which would be in line with the GDP growth. That's a number we have shared with Rubber Board also. And whereas on the production side, we still continue to be around 8.5 lakh tons. So that gap of almost 40% between domestic demand and supply is only going to widen going forward. So that is, the medium and long term overall, shortage or shortfall between demand supply, that continues to be a concern. Although, as you may be aware, tire companies have collaborated with the government for rubber planting of 2 lakh hectares in the northeast, which we hope will take care of the incremental demand going forward.
That's good to know. Rajiv, also, since there is very strong demand within India, and as you said, the dependence on imports for a larger chunk is still there, how are you looking at the international markets? Because all the figures that are available globally as well suggest that it is going to be a deficit year in the global markets also, because by the end of March, we're looking at global inventory stock declining year on year. And when you look at the global study group numbers, those also are a bullish picture.
Well, climatic factors, are putting pressure on rubber supplies globally across all the ASEAN countries, parts of Africa also. However, the demand continues to be bullish primarily in India, because China still hasn't come back, in its with its earlier growth numbers. So I think whereas for the rest of the world and other countries, overall demand side, the growth may not be so encouraging, but India, thanks to our, status of being the fastest growing emerging market, I think here the situation is quite positive from the demand side, whereas supply continues to be muted. And that's the reason, tire companies are now sourcing large quantities internationally so that there is no disruption in production.
Rajiv, also with budget around the corner, is there something that tire as a sector or rubber as a sector is putting forth as suggestions or expectations that you would have?
Our, if I may say, perennial demand continues to be that, considering the overall natural rubber situation that we just discussed, the deficit between domestic demand supply, the overall pressure of availability. Atma has always been seeking, duty reduction on rubber because this continues to be at 25%, which is much higher than the duty on tires. So the added, if I may say, concern is that there is a inverted duty structure for tire industry, and we hope, as in the past, that it will get addressed and resolved in this coming budget.
Okay.
Okay, all right, Mr. Buddhi Raja as well as Manisha, thanks very much for taking us through that conversation. Well, on that note, we need to wrap up with the news that we have the Nifty, the Sensex, the mid-cap index as well as the Bank Nifty trading with gains of around anywhere between 0.2 to 0.3%. It's a wrap on Halftime Report. Business Lunch up next.